So this will be a brief lesson where we'll discuss trends. We have covered trends in our previous video, so you should be familiar with the concept. A trend refers to the overall direction of the market or the price of a security. In technical analysis, trends are identified using trend lines or price action, which highlight the occurrence of higher swing highs and higher swing lows for an uptrend, and lower swing highs and lower swing lows for a downtrend. Now let me explain how this appears in real life scenarios. We already know that an uptrend signifies a price increase, a sideways trend indicates price consolidation, and a downtrend signifies a decline in the market or the price of a specific commodity. Let's observe how this manifests in real life scenarios. Consider this GBP USD chart. I understand that this candlestick may appear strange or complex to you. We will cover candlesticks in the next module and you will understand their meaning. Now let's delve into trends. For instance, the period from year to year represents an uptrend. Within an uptrend, markets cannot continuously rise in a linear fashion. It is not feasible. Markets movements follow a zigzag pattern, even though the overall direction remains upward. This is an example of an uptrend over here. Can you see it? Furthermore, we also have downtrends such as the one from here to this point. That's a downtrend. This is how an uptrend appears. Let's consider another example. The period from year to year represents an uptrend, while the period from year down to year represents a downtrend. These levels we observe are swing levels. These small levels you see are called swings. Swings. This is a swing and this is swing. And this is a swing. Do you comprehend? Let's identify more swing levels. This is a swing level and this is a swing level. There are several swing levels. This is a swing level and this is also a swing level. Now, let's explain what we mean when we say an uptrend involves the price creating higher swing highs and higher swing lows. For instance, this is how the price moves in the market. When something is ascending, remember that it doesn't rise in a linear fashion. It doesn't progress like this. Rather, it exhibits different kinds of swings. To classify something as an uptrend, the swings it forms must be higher than the previous swings. Do you understand? Each swing must be higher than the previous one. This is a swing and this is a swing. Hence, this is a swing low and this is another swing low. This is another swing low and this is another swing low. Do you understand this concept? And this is a swing high and this is a swing high. But remember, if you notice, this swing high is higher than this swing high. This swing high is higher than this swing high. Do you understand now? As for the lows, this swing low is higher than this swing low. This swing low is higher than this swing low. This swing low is higher than this swing low. This is how you confirm an uptrend. By observing higher swing lows and higher swing highs, the uptrend starts from here and ends here. Do you understand? As for a downtrend, let's clear the chart. In a downtrend, the price has been moving in this manner, like this. We have a high here and a low here. Remember, this is a downtrend. We expect to observe lower swing highs and lower swing lows. Lower swing highs and lower swing lows. This swing high must be lower than the previous swing high. This swing high must be lower than this swing high. And in terms of the lows, these lows must be lower than the previous low. This low must be lower than this low. It's as simple as that. This is a downtrend and that's how it works. Now let's discuss a sideways trend. Let's clear the chart once more. In a sideways trend, we don't observe higher highs or higher lows, nor do we see lower highs or lower lows. This is because the price is moving within a channel. For a sideways trend, the chart may appear as follows. What do you notice about the chart? There are no higher lows, higher highs, lower lows or lower highs. Instead, you only see support and resistance levels. The price is simply moving within this channel. It's not increasing. It's not forming higher lows or higher highs. Do you understand? This is what a sideways trend looks like. To summarize, in an uptrend, the price generally rises during a specific time period. Demand outweighs supply in this case. When the price increases, it indicates a higher demand for that particular product. which drives the price up. Conversely, in a downtrend, the price generally declines during a specific time period. Yeah, supply surpasses demand. It is as simple as that. We discussed this in a previous lesson as well. In a downtrend, data points fall as illustrated in a real life scenario by lower swing lows and lower swing high. You can observe them: lower lows, lower highs, lower swing highs, and lower swing lows. This swing high must be lower than this swing high, and this low must be lower than this low. It's that simple. Let's examine another real life example. So let's clear the chart. Please don't worry about this platform. Later in this course, I will show you how to register and set it up. Once you complete the course, you will possess all the necessary skills to become a successful trader. I promise you that. For example, we can consider this area, this region, as a sideways trend. You cannot effectively trade in this particular setup because the price is moving within this channel. There are no higher highs or higher lows. It's simply a sideways trend. However, from this point to this point, we can determine that it is an uptrend. It is an uptrend from here to here. Then we have a downtrend and another uptrend from this point to this point. After that, we observe another sideways trend. Sideways, uptrend, downtrend, uptrend, sideways, and then another uptrend. That is how it works. I hope you understand. If not, please rewind the video. This covers everything about trends. In the next lesson, we will discuss trend lines. Take a break, enjoy your coffee, and we'll see you in the next video.